All right, welcome everybody, and thank you for joining us. Today's episode of Trade the Chain. It is the 16th of June. We're a little over halfway through the month here as we roll into summer. Wow, time has gone by. First of all, I just want to give a big shout out to Rob over at Digital Asset News, who just dropped a video about 30 minutes ago on how to use Zero Exchange, which is a really cool exchange. And then, of course, as an example, used Trade the Chain's loyalty program governance token Cent. So thank you for that. Very much appreciated. Joined alongside me by CJ, our crypto analyst from marketrebellion.com. Monty and Ryan are playing sick today, so they will not be joining us. But, one of the things that we're going to do, this is going to be not so much a really long episode, as we're going to cover the big boards today and kind of do a recap on the FOMC meeting today and what the Fed had to say. So that's, it didn't move the market. Anybody doesn't know, the Federal Open Market Committee meeting that the Fed does is basically how they're going to treat the economy and decide which tools they're going to use to battle inflation. So we will get to all of that in a moment. But CJ, you are pulling like double, triple duty today, please, sir.
Yeah, I would love to. Please enable screen sharing and I will get right on that.
We were too quick to the punch.
Just a reminder that nothing said today by Alex or I, Market Rebellion, or Trade the Chain should be considered financial advice. We do this for entertainment and educational purposes only. So please keep that in mind, guys, and don't blame us for your bad trades or investments. Very important to always take responsibility for your own trades. But anyways, Trade the Chain is also brought to you by Trade the Chain, an AI-driven sentiment indicator and dashboard system with actionable alerts to help you beat the market. We're going to look at the dashboard in just a moment here as we check out the overall market as a whole. Also has a group of members worldwide that are sharing their victories and defeats, all in the Discord community live chat. So you can check that out and get a 2-week free trial at tradethechain.com. And then moving over to Market Rebellion Crypto, this is myself and Monty and our community at Market Rebellion. And with us, you get weekly trade ideas, macro portfolio allocations, a pro charting platform, a trading education curriculum, and an elite community of traders all throughout the world and much more. If you're serious about trading crypto, this is the service that gives you everything you need all in one place. And you can start your first month trial for just $1 at marketrebellion.com/crypto. We appreciate that, guys. We have a mobile app and hopefully some new stuff to be able to share with the community very soon. Going over to the Trade the Chain dashboard really looks identical, honestly, to what we saw yesterday. I mean, we're just very neutral overall when it comes to the hourly and daily sentiments, with the long term obviously remaining pretty consistently bullish. We've fallen from 40K today down to 38 after the recent Fed announcement, and we'll get into that later in more detail. But Alex, anything you'd like to share as we start the show?
Yeah, sure. Why not? As Rob alluded to on the show, we've been working hard this week. We have a listing happening tomorrow for the Cent token on Bitcoin.com exchange. So kind of excited about that. And it'll be our first centralized exchange listing, one of many to come over the course of the next couple of months. And there's a link in the exchange at Bitcoin.com exchange if you haven't visited Roger Vere's exchange. So that's exciting. And then also, I am going to drop actually something. We are giving away $20,000 in Cent tokens in a trading contest on the Bitcoin.com exchange when it goes live tomorrow. So that's it. More details to come.
I might have to look into that, but I don't know if that would be a fair winning choice. I want to give it away to the viewers of this show and the community participants. But Congratulations on that, Alex. I wish you
Thank you,
guys
sir.
the best of luck with your future endeavors with the Cent token. I'm sure you've got very much planned that you can't talk about or whatever. But
Well,
anyways,
I will say that the audience today sees you smiling, and they're feeding off of that. So I think we want to hear some relatively good news.
I have to stop being such a prick all the time because I'm happy. I think it means the market's going up. But admittedly, I don't have a whole lot to say about Bitcoin today. I still am pretty bullish to neutral, honestly. I like the weekly chart a lot. We can get into that in a moment and more. But really, I mean, if you're trying to trade this practically, the way I like to do it is just by looking at these bands and using the outer band as a trailing stop. So this would have got you in the trade, a close above that outer band at roughly 38.7. And then, if we close below that, we're probably going to see some type of regression to the mean or just sideways to neutral consolidation throughout this channel. So we were pretty bullish this morning. Then we had some Fed comments talking about a potential rate hike coming in, not until 2023, but that still scared the market, not only in traditional equities, but also in Bitcoin. I mean, actually, it's been rather non-eventful for Bitcoin. It hasn't really changed anything too much other than about $1,000 drop in price. But overall, the line in the sand here for me is that top Bollinger Band. That's going to tell me whether or not I should remain in Bitcoin, at least in the short run. Now, I do think it's a good time to accumulate Bitcoin for the long haul, especially when you look at this weekly chart. I've been really preaching this, but I love the fact that we got this TD by 9 combined with the bullish hammer candle. We have oversold metrics that are beginning to turn up in both the CCI as well as the stochastic indicator. We've held that 20 smooth moving average, and we're finding support at that upward sloping trend channel. So all good things on the weekly that I really anticipate will be good for Bitcoin in the coming weeks. Also, we have declining bearish volume, which means that the sellers are no longer really dominating the market. They're losing a lot of momentum, and some may argue that they're actually opening the door for bullish price action as a result of that. As you can see, when we look at traditional equities, the S&P is down about 0.5%. The Dow is down about 0.75%. The Dow has been pretty bearish as of lately in just its posture and the overall trend. But you can really see that the effect on this Fed announcement has been very evident on equities, and that's kind of spilled over into crypto as well. Now, do you have any comments on Bitcoin here before we go into ETH or anything else?
No, I think really I think really what it comes down to is what our thoughts are going to be on the Fed's decision, and really, what that means for Bitcoin altogether, because there was a couple of ways it could have moved today. And, the reaction was one of, oh, I'm sorry, did that just pop up? Is that the $20,000 trading contest? I'm sorry. So back to that. The
The award goes to Alex Mascioli.
I will never beat Rob, the king of the show. No, I'm going to hold out till the end, because I really want to kind of educate the folks on why Bitcoin's where it is now, because of the FOMC.
Cool. So I guess I'll go into ETH now, if you're cool with that.
That would be perfect.
All righty. So ETH, I mean, there are some who are bearish ETH, and I have to say I'm not fully on board with that mantra. I'm pretty neutral on ETH. I see it being very similar to Bitcoin. Obviously, we're not above that outer band, which would justify an entry and then would be able to give us a trailing stop. Since we're not above there, I have no direct action to take. Now, the inverse of that, or taking the opposite perspective, is that if Bitcoin falls to say 36K and creates a nice macro higher low, Ethereum will likely fall very far and follow suit. And by very far, I just mean like to this next kind of bottom support level of around 2000 or 2100, roughly in that area. So if, these bands are neutral, but if we start to get it to turn over a little bit like that, and we close below that bottom band, that's a short entry or a short trigger to enter on Ethereum. And a close back above it, it's very simple, would just trigger an exit of that short. So we are somewhat close to that. And so we are somewhat bearish, but I don't think there's going to be an instance where if Bitcoin goes to like 42K or 45K and resumes that bullish price action, Ethereum's going to follow and be bullish too. Like I really don't see a world in which we go higher in Bitcoin and then ETH falls to like 2000. We've just moved such in lockstep thus far that I don't even care what Bitcoin dominance is showing at the current moment. That's all I have to say on ETH, though. Why don't
Yeah, I want to hear your commentary on ETH real quick. Now we got that the bottom of the candles there, just above 2000, back over on 521, 522. A lot of people, I'm seeing 50% of people saying, we're going to 1800, 50% of people saying get out of here. It's never going below 2000 in this cycle. What are the chances of us going below 2000 with Ethereum? I mean, from what you just laid out in the case, it doesn't seem to be, let's say, the popular vote.
I'm curious. I just want to get the percentage. I want to measure the percentages when comparing ETH and Bitcoin and a potential drop. So a drop to 1800 would be roughly minus 25% from our current point, which, I mean, for crypto, that's not out of the realm of possibility. But that seems rather unlikely unless Bitcoin goes to something like 36K. And my mathematics skills are not that great off the top of my head. That would only be a 5% correction, even if Bitcoin went to 36K. If it had kind of a comparable correction, we would create new lows. I think if we created new lows in Bitcoin like this, and this turned into a giant bear flag, which I don't think it's going to, but let's just say for the sake of argument, it does. Sure, I could see Ethereum experiencing a 25% drop, and I can visualize a world in which that's possible. But if Bitcoin just remains neutral or even goes up, I don't see Ethereum doing anything that bearish. I think if you're looking at like the narrative of ETH and you're talking about, oh, ETH 2.0 is going to be delayed, so many other great projects are going to take its place. I just don't really buy that, because regardless of the fundamentals of ETH, it's still just trading in lockstep with Bitcoin. And until that gets broken, I have to respect it.
Yeah. Well, let me ask you this. I don't know if you caught Rob's video yesterday over at Digital Asset News, but is there any chance that you think that the node running on the International Space Station is holding up the price of ETH currently?
Isn't that an older story of like 3 weeks ago that we were talking about yesterday?
So Rob hit me up. It's from like a week or so ago, and he goes, "Hey, did you know this was happening?" And I was like, "What?" He goes, "Oh, good, because it's an old story, but apparently I'm the only one who found it." So interesting. He got it was interesting reading through the comments on that video that people left for him. So but anyway, moving on. Let's get to the FOMC statement. Let's find out. You have an article from CNBC on a recap of that and what Jerome Powell had to say and what we can look forward to?
Yes. So generally the takeaway from this is that, maybe we might see some rate hikes in 2023. That's far from certainty. Nevertheless, like I mentioned earlier in the show, that was enough to send not only the Dow, NASDAQ, and S&P, but even Bitcoin slightly lower. And so the market didn't react horribly, but obviously it wasn't positive either. I did not watch it. I did not get a chance to watch it live, so I am kind of skimming here. But to my understanding, is pretty much just more of the same in terms of like money printing, and there wasn't any. There was no clear mention of tapering or any type of directly hawkish behavior. So yeah, I mean, it's just kind of more of the same, was my overall takeaway from it.
Well, it's interesting because there's always two sides of this whole mechanism of their tool belt, so to speak. So, right, like you have housing prices. I have friends who are looking to buy houses. They have been over the last 24 months. You have housing prices that hit some lows with mortgage rates that are creeping up on interest. Either that, or the flip side is you have interest rates on mortgages going down and housing prices increasing. Right, you're never getting both at the same time. It's never that perfect entry point into that market. But one of the things that I really listen, I mean, to me, it doesn't matter over the course of the next 12 to 24 months. I was kind of hoping they were going to look for some rate hikes, immediately rather than going out 12, 24 months. I kind of wanted that to prop up maybe some Bitcoin price action of sorts. At the same time. Yeah.
You think if they raised rates, that would be good for Bitcoin?
No, I'm sorry. Lowered rates. I apologize. I made a mistake.
Sorry.
Thank you for correcting me before I went on.
Whoa, I hope they don't.
No, one of the things is because my worry is the equity markets. And I don't want that to be the catalyst for our downfall. I've said it once. I've said it many times. Everybody knows it. But I was looking for them to lower rates in the short term, so that way we could prop up stability just from an economic sense in the short term, at least until the end of the year. Then you can do whatever you want.
Just let the stock to flow model pan out, and then think about getting short. But I'm optimistic for a variety of reasons on the overall macro environment. I think we will make it, and stock to flow will come through and end up being accurate. But yeah, I mean, one of the things that I think is worth noting here is the 10-year treasury yields and just kind of understanding their impact. If you go over to TradingView and you look at the ticker symbol TNX, that is going to be the CBOE 10-year treasury note yield. And so when we see parabolic advances in the TNX, that usually means it's bad for the stock market, and it's going to be very bearish overall for the equity market as well. This whole parabolic run was very frightening to the equity market and the cryptocurrency market, and it made it sell off as a result. And as long as the 10-year yields are at least remaining somewhat stagnant, as long as they're not going in a full-on parabola, like what they were doing earlier on in February, March, and April, then the stock market and the cryptocurrency market should pretty much be fine. Obviously that's just one factor, but I wanted to put that on individuals' radars.
Yeah, and just so the folks at home know, the 10-year is really the simplest barometer the layman can use as far as inflationary, deflationary market movements. The 10-year is really the catalyst. Now, you look at the chart that CJ just had up, and it was dipping down back May, July to 0.6%. That is something that really happened about, I think it was 2.5 years ago. I remember it scared the pants off a lot of people. The range bound percentage point was in the 2 to 3% range. And then we all of a sudden went into a rapid decline in percentage points on 10-year. And it was really nerve-wracking. A lot of people thought that was going to be the breakdown of the market. We had inverted oil prices a year after. So, I mean, which, by the way, that trade, CJ, I still hold that trade.
And
Up 130%.
That teaches you how to hodl. Forget Bitcoin, right?
Everybody yelled at me about the double levered oil index. So, but I held on to that puppy. I rode that thing all the way down to like minus 85% P&L, and then rode it right back up to 135%. So I'm happy.
I'm hoping my zero allocation does something similar.
Open Zero, StormX, all that. Speaking of which, if Rob is still listening to this show and hasn't gone to sleep yet, I got to coordinate with him and get on with him to do some portfolio reassessment for the mid-year. So we can give because the folks are just going to keep throwing tickers into the chat saying, what do you think of this? What do you think of that? So maybe if he's up to it, maybe we'll do that tomorrow or Friday. We'll see. So,
yeah,
but
that'd be great. I always love when you guys do those updates. It's always really interesting.
Yeah, we like to have you listen and laugh at us and stuff like that. We know you can't do it. You don't want to get in trouble and stuff like that, but we like to be laughed at by you.
Yeah. And one point I wanted to make about the stock market is like the thing has just been so strong. I mean, if you would have bought every dip off of like the 20 smooth moving average, you would have been really, really profitable, at least in the SPX. But I mean, you think about all the adversity that it's come through. I mean, remember the election? We were thinking, this could bring uncertainty. Nothing happened really eventful. We just kept going up slowly and steadily. Same thing very shortly after happened with the TNX, where we sold off, but those who bought the dip ended up being the winners in the end. And so I just think we're going to keep on trucking here for another 6 months at least in the overall macro environment. But that's all I have to say about that. Just emphasizing the resilience in what we've seen thus far.
I'm in agreement with you. I don't think the Fed can even let it falter a bit. I think this year is a very important year for the market, for them, for the country. So I think we have a lot of overabundance of support coming out of the Fed as far as the market, even if I believe that it's overvalued. So I'm in agreement with you. I just get scared sometimes when they have meetings.
Yeah. I think we all do. I've learned not to fight the Fed. I've donated a lot of money to that cause over my career. So.
That's the one charity that's non-deductible. All right, folks, thanks for joining us. Sorry for the quick episode. I actually have to hop off and record a show with John Najarian from marketrebellion.com. So I'm going to do that. It's a long day. Trading Nichols, Digital Asset News, Alex Quintero, Daryl Lister, all of you guys, thank you very much for watching us. Always appreciated. We're going to start doing some more shows like we did with Theta and T-Fuel, covering those as this market progresses sideways. So what about Cent? Go to centtoken.com. It has all the news you need, or all the info you need. But we're going to start doing some more project stuff, and definitely collaborate more with Rob and more with Lucas if they haven't become bigger stars than our channel. So, all right, folks, thank you very much. Hang on to your handlebars. Happy trading.